First of speaking to all of you after that accelerated lunch. Hope all of you are enjoying that and digesting that. I have, if you will, humor me. I beg your cooperation. If you could all just stand up just briefly here, please. Thank you. Okay, great. And I just want to say that in our corporate retreat in our headquarters in Geneva, we had a motivational speaker come to us and train us on how we can motivate audiences that we may speak to. So this is one thing she recommended. So just, if you will, turn to the partner next to you, right there. Okay. Okay. Raise your hand. Raise your hand. No, like this. A little higher. And just slap them across the face. Not too hard. You don't want to leave a mark. You just want to see their eyes go up a little bit. And if that doesn't work, just follow through the other way, like this. Okay. All right. Good. You can sit down now. Thank you. Okay. Excellent. Okay. Good. So here I am. Okay. Great. So, as James told you, my name is Jeremy Burchard. I work with Symbiotics. We're an impact investment advisor. Our headquarters is in Geneva, as I just mentioned. But we also have regional offices around the globe, one in Mexico City, one in Cape Town that I set up myself, one in Singapore, and of course at the headquarters there in Geneva. We specialize in impact investment, and particularly within that sector, microfinance. So that's our specialty, that we've been advising our clients for 10 years on impact investments in microfinance. So I'm here to give you a little bit of information about that. And these are, in case some of you, well, let me just ask, how many of you know what microfinance is? Okay, good. All right, more hands go. Okay. So the end clients, these are microfinance institutions, as we call them, MFIs, banking organizations, many of them informal, so cooperatives all the way on up to full-service banks, but that they focus on the poor clientele. These are some of those poor clientele around the world and some of our microfinance institution partners, as you can see. We're global, as you can see as well. We're a leader in impact investment in investing in microfinance. We cover the globe, over 750 microfinance institutions that we've researched and that we have many that we have partnerships with, over 200. Over $2 billion placed into microfinance institutions since we've started. And right now we have about $850 million under management. The interesting thing here, does this have a pointer? Okay, I just doing a note. I just bought this laser pen and I'm going to use it at every opportunity. Okay, it's not working. All right, it shows on the wall but not on the, okay. Less than 2% cumulative default since 2005. So what we like to point out here is that, in fact, it's a stable asset class and has performed very well. Okay, sorry. We're a market leader in Africa in microfinance investments, foreign investments into microfinance. We're in that, what I just learned now is called Middle Africa, which, by the way, I kind of like that idea. The cheese part of this African sandwich, that's our specialty. So over 200 million placed into microfinance institutions in sub-Saharan Africa or Middle Africa in nearly 50 companies across 18 countries. So, so we consider ourselves very knowledgeable in the middle market of Africa. Impact investing, now raise hands, tell me how many of you think you know what impact investing is. Okay, one person, that's good. More? Okay, another one there, the California guy. Okay, good. So I'll be really brief here because I only have 4 or 5 minutes left. In the investing universe, of course, there's responsible investing. This is how we see the universe. There's the do no harm. In other words, very focused on filtering and screening investments in advance, making sure your investments aren't doing the things you don't want to be, that they shouldn't be doing. Then there's the actively doing good, which is what we consider impact investing. In other words, not just filtering and screening the investment, but also monitoring the investment and making sure that the business model, integral to the business model of these companies, is doing something environmentally and socially positive. So that's how we view impact investing. What's the market size of that? Well, as you can see, it's still a tiny bit of the overall investment universe. So impact investing, maybe 90 billion. And then within that, microfinance, 30 billion or so. Of course, we'd love to see that grow. This is why we think microfinance is a good vector for impact investment. This is the value chain as we see it, leading from investors, of course, who are investing through investment funds, putting their funds into emerging and frontier markets, into financial institutions, these microfinance institutions, MFIs, who support micro and small, in some cases medium enterprises, that's their core clientele, to be able to give greater access to primary goods and services of necessity, as we call them. This is really the consumption story. I'm going to walk over here. Food, homes, jobs, energy. All the basics. This is Africa growth story at the bleeding edge here, where the poorest need to be able to access and give others access to basic services, and in particular jobs. Microfinance supports very often informal businesses, which don't necessarily hire a lot of people, but the informal businesses, if they grow, become formal businesses, and then they can hire more and more people. So we know the SME is increasingly important. We heard that earlier today about providing jobs to a continent that has so many informally employed people. So we see microfinance as kind of a bottom level vector to help build the Africa growth story. As far as the types of institutions that we're supporting, you can see that we even work with banks, specialized banks that do downscaling, as we call it. In other words, providing financial services to poorer clientele, not just the top commercial customers. But that's a bit of a rarefied space. There aren't that many. Tier 2, that's more common. That's really our sweet spot. These are institutions that are already regulated typically in some way. So what we call non-bank financial institutions, they may have a specialized microfinance type license that can offer, in many cases, deposits as well as credit to their clientele. And then there's the bottom of our universe, which is Tier 3, which is thousands upon thousands of informal cooperative type structures, which we do support very often. With some of our debt facilities, we provide them loans with the idea that we're helping them to formalize, get up into the next tiers so that eventually they can offer more financial services and they can become regulated, better governance, better environmental and social governance. Okay. The theme I was supposed to talk about were challenges of impact investing in Africa. I probably don't need to educate this audience on all those challenges, but I can say within microfinance impact investing, some of our key challenges are really building the governance of these institutions. As they are smaller and less formal, they may have excellent business ideas and ambition, but they really need to build the governance structures and the idea of risk inherent in their growth that they expect to have. So for us, introducing this idea of sustainability, long-term viable growth is an important part of our effort in supporting these microfinance institutions. In addition to that, of course, all the normal issues. I would say even more so than just having this multiplicity of legal and regulatory regimes all across Middle Africa. There's this need for institutions to know about their clients, not just because the regulator may have, know your client regulations, but because in order to introduce products that are meaningful to poorer clientele, you need to understand their needs, and you need to understand how they're using your product and what impact it may be having in their lives. And so part of impact investing is directly tied to information systems and the ability to capture and monitor information about your clients. So big data is becoming a big issue in Little Africa. In monitoring impact, we do have some associations that are helping us to kind of define the space. So there are many different standards that are inherent to impact investing that many of us already know about, GIN, for example. But there are also some that are specific to microfinance, such as the SMART campaign and MF Transparency, which are really focused on client protection principles in microfinance lending. So ensuring that you're treating your client well. Symbiotics, how we measure impact at our our microfinance partners, we actually have our own specialized tool, our social responsibility rating. It's actually a series of 65 different metrics along 7 thematic areas that you can see here that we rate every single MFI that we, 2 minutes, thank you. We rate every single MFI that we talk to, that we partner with, that is. We give them a social rating, we compare that against other MFIs that are our partners that also have social ratings, and we update it every single year. So we're monitoring their progress on all these environmental and social themes every single year. Okay? And for the pension and sovereigns that aren't in the audience, that we wished more of were in there, but I know there are a couple here. I talked to some at lunch, that's excellent. Symbiotics, we do actually manage pension and government funds. In fact, some of our original clients 10 years back were Swiss pension funds. So we have several different funds that we manage. They're all invested in different products. Some are advisory mandates, some are special accounts, but they're all in our debt products. And I just wanted to make the point here that microfinance debt, in any case, has performed extremely well. If you look at these against the key indexes, emerging market indexes, ours is, I wish I had the pointer. Is that late? Okay, no, this doesn't work. So ours, of course, is this very nice, smooth, stable line in the middle. That's our performance. It's not extremely high yielding, but in today's environment, very low interest rates, 4, 5, 6, 7, 8% may look good, and particularly with that kind of stability. We're now also undertaking an effort to launch a private equity product for sub-Saharan Africa for microfinance, as well as an education finance project. So I think I've maximized my time, talked very fast, hopefully everyone understood me, and I'll leave it. Do we have any questions? One question, great, okay. Who has the most important question you can ask?
We will screen the question.
Not even, okay, okay, we have a hand. Should we give him this? Oh, he's got, okay, nice.
It's just a question regarding the development between microfinance graduating to SMEs and how far along that development chain your participation is before a company you would finance develops to the next step.
Right, so excellent question. There used to be this idea in microfinance that you would graduate your clients from a microfinance institution into some commercial bank. Well, that hasn't really panned out. What we see more often is that good microfinance institutions with a progressive vision realize I can go further up market and still service people that the banks aren't touching. So they can go pretty far up. An institution I was just talking to and met with in West Africa, their average size loan to their clients is around $5,000, $6,000, but they will make loans up to $50,000, maybe even $100,000. If they know this, if it's a client whose industry and sector they're very familiar with. So this idea of going upscale and downscale, becoming full service provider and meeting the needs of clients at all different levels in that economy, other than what you would consider commercial, is appealing to many MFIs. Although I would say there are certain limits. And so typically the MFIs, the average loan size that the MFIs that we work with, that they make to their clients is on the order of about $3,000, $4,000. So that's still their average. But I think there's a huge gap, particularly in Africa, for SME lending. And you probably already know that. So we're thinking of ideas ourselves of how we can address that through different funds. Okay. Any more? Okay. Excellent. Thank you very much.
Thank you.